Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Trading TV. This is your stage to shine.
Hello, good morning. Good morning, everyone, and welcome to a new episode of Chat and Chart. This is the London Session Open. Hope you had a great weekend. Just checking. Can you guys hear me? Can you guys hear me well? Okay. All right, guys. So this week we're going to start with the charts first, and then we'll go to the calendar because the calendar is not as packed as the weeks before. So I think the technicals this week will be more important than the calendar readings or the data points. However, we have one very important release this week, which is going to be tomorrow. I'm talking, of course, about the US CPI. If that number comes in higher than expected or like relatively high, we're going to see a continuation in the strength of the US dollar. And if not, we're going to see a correction, or like we might see the DXY giving back some of its gains that we saw in the past couple of weeks. So for now, let's start with the DXY charts. We start with the monthly chart, of course. So as we said last week, the monthly chart closed very bullish, okay, and this week, like prior week, it tried to go lower, but it couldn't and got rejected. So let's take a look at the weekly. Yeah. Now, as I said, we might be retesting this area, which is 100.3, 100.4, before continuing upwards. But like the big picture is a strength in the US dollar. Okay. So for now, the weekly is still somewhat indecisive. I think this will change after we see the CPI release. Okay. Hi, Meza. Hi, Abby. Hi, Arif. Hi, everyone. All right. So now we move to the daily, and let's take a look what's happening here. Okay. So it got rejected from this trend line, which is not bad. It might not even reach this area, which is 100.4, because it already reached 100.6. So this could be it, but we'll have to wait and see. But for now, the daily is like on Friday, we had a bullish rejection to the upside. And today, we already broke Friday's high. And we're starting to see some strength or momentum on the XY. Okay. What about the 4 hours? Okay, it's still like, that's a very clean uptrend, like higher highs, higher lows. It's still respecting the trend line. It's still respecting the major moving averages. So I think we still have more upside to this in the coming week. And according to this, we might see a positive or a bullish CPI reading. Meza started asking, which instrument is the best to master price action? Euro USD. Hit the like button and subscribe. Yes, please hit the like button and subscribe if you have not yet. All right, so that's it for the XY. Let's now move to Euro. It should be the exact opposite. Let's start with the Euro. Okay, so monthly was very bearish. Weekly, somewhat indecisive. We might go reach 1.1480, 1.1490, that area before continuing to drop, or we might just continue dropping from here if the DXY continues going up from here. Okay, so if you draw a trend line here, look, like it's still like below the trend line, and it got rejected from the trend line on Friday. If you can see here, Like it tried to reach higher, but then got rejected and closed below. So I guess it's one of two scenarios. Either we, like the first scenario is it goes down from here, or it continues upwards toward this area, which is 1.1490, 1.15 possibly, before continuing the drop. Okay, and then the 4 hours is telling us the exact same thing. We might continue from here. So if you ask me what do I think would happen, like what's more likely to happen, I think a continuation from here. But both of them are equally possible. Like it's 50-50. It's not like it's more likely to go down from here based on technicals. No, based on technicals, we have a 50% chance that it either continues dropping from here or it goes to 1.15, 1.1490. Okay. Arvind Arvind is saying, I've found my edge, but I'm having trouble following it consistently. Last week, everything was going well, but today I lost my discipline again. Today already? We're still in London session. When do you trade? Which session? I'm having trouble following it since last week. Okay, so tell me, I want you to tell me two things. What was going well and what happened today? So that I can help you better. Okay, so that's it for Euro. Now let's move to GP, like the cable GBP USD, the pound. So I think the pound is slightly stronger than Euro because the GDP numbers coming from UK are actually good, and they're like at their highest since they're not very high, but they're at their highest since maybe I don't know 2024. So they're still relatively weak. That's why we see this consolidation. Like if you take a look back here, let me show you what I mean. Like since here, which is June 2025, we're in a range. I already mentioned this before, but that's why I'm telling you, like GBP USD is not a very good instrument to swing right now. It might actually be good for scalps, day trades, maybe, but overall, I don't like how it looks. The daily looks somewhat bearish because it got rejected from the 126-day moving average, and it closed below some of the major moving averages. It's still below this trend line, and it has more potential to go downwards, especially if the dollar goes up. So it's more likely to drop than it is to go up. So yeah, that's it. But I wouldn't, for example, swing it all the way here. No, I don't trust it that much. Okay, the 4 hours still the same. So let me tell you what I see here. So on the 4 hours, although on the daily, we have some bearish price action, but on the 4 hours is still above the trend line that has been going on since the last week of June. So it's been going up since then. That's since the agreement between US and Iran. It happened during that week, so dollar started to drop and GBP gained some momentum. But if we're going to short it, or if we're going to look for sells, even on a daily basis or like on an intraday basis, we're going to have to wait for this trend line to get invalidated. How do we get it invalidated? It needs to break below, try to go above again, like retest it from beyond, and then continue dropping. That's when you get the cue to sell GBP USD. Okay, let me check. My planned trades are going well, but in between, I'm making random trades because of impatience. Yeah, you know your problem, Avrand. So, hi, Paulina, how are you? We have a psychologist with us. Paulina, can you please take a look at what Arvind FX9999 is saying, and give us your 2 cents on this from a psychological perspective, please. Okay, now the 2008 crisis, financial crisis, is very different than the Black Monday crash of 1987. But I think we're closer to see something like the dot-com bubble that happened in the early 2000s because of the sector concentration or the sectoral concentration in AI. In the past, like in the early 2000s, the problem was internet. Internet was anything with .com after it becomes a trend, and people start throwing their money at it. So we saw a huge bubble inflate in the early 2000s because of the internet. That's why it's called the internet bubble or the .com bubble. Now what's happening is we're seeing anything with AI next to it is having people throw their money at it. So I see it more like the .com bubble more than it is 2008 or 1987. So I'm expecting to see something like very dramatic very soon. Like not very soon, like this year, maybe next year. But I'm expecting to see a crash in the um, stock markets, especially the U.S. stock markets, and especially the AI and tech sector. So yeah, Nasdaq and S&P mostly have broken chart. How to tackle them? Looking at those instruments feels so hard. I want to work with trendy instruments. Gold, forex pairs are all sideways. Gold is not sideways. Gold is actually trending down. Euro USD is trending down, but you need to zoom out a little bit to see that trend. But if you're looking for intraday trends, that's just impatience. You're like, let me give you an example. 1 second. So if we go to the gold, if we go to the gold's chart, so even if you want an intraday trend, this is one, and this is one, and this is one, and this is one. You have many trends, like many downtrends on the intraday basis, but what you're doing is you're looking at it like this. Okay, so you sell and then it goes up, and then you sell, it goes up. So you start buying, then it goes down. Then you start buying again, it goes down. Then you decide, you know what, I'm going to start to sell. You start selling, it goes back up here. And then you say, okay, then it broke above here, so it must be going up. So I start buying again, it drops. That's what's happening with you because you're too zoomed in. Just zoom out and look what's happening here. We're in like, look how long has it been like, look how long it has been trending down since March 2026. So you have a 3-month-old or like a 4-month-old downtrend. However, you're still not being able to catch those trends, those intraday trends. So what you need to do is to zoom out. Whenever you see anything, any price action to the downside, you go with it. That's why we say the trend is your friend and never go against the trend. Because when you're too zoomed in, you cannot see the big picture. Okay, according to current geopolitical tensions, yeah, we already answered that. Will it affect US dollar too? The AI bubble burst, of course. Yeah, US dollar might actually strengthen because if you take a look at look, when was 2000? Early 2000. Here. So this was the the period of the dot-com bubble. Look what happened to the US dollar here. It went up from 97 all the way to 120. So yeah, it becomes more attractive. Why? Because people are running out of investments. Where are they going? They're going to the US dollar because that would cause inflation. That would cause higher interest rates, so more attractiveness on the US dollar. And people, when there's something we call dash for cash, they start moving their money to cash because they don't trust anything else. Everything is dropping, everything is bleeding. So they go to US dollar. So yeah, that actually supports our long-term analysis of that dollars going upwards, and dollars is actually expected to reach 120 points. So yeah, great question, Mr. Abi. Yeah. So since Paulina did not answer you, Arvind, I'm going to answer you. So your planned trades are going well, but you're making random trades. What I can tell you is you need to make that decision that you're not going to trade when you don't have a setup, when you don't have a plan for the trade. Jumping in randomly is just gambling, my friend. So you need to stop gambling and make a conscious decision that I'm not going to do that anymore. And anytime you find yourself doing that, you're going to actually punish yourself by not trading for that for the rest of that day that you broke your rules on. Okay. All right. You are welcome, Mr. Abi. So now I think it's time to move to gold. 1 second, reset. So yeah, like a few months ago, like I don't know when was it when it broke here. Yeah, last month during the beginning of June, we had two scenarios for gold. The first one is that the 4100 was the low, and we're going to see a new all-time high from there, or we had this scenario, which is like a surge to 4900, then a drop to 36 or to 3800, and then a continuation to a new all-time high. So what's happening now is the second scenario, which is like an upward move to 4900 and then a drop to this area. So now 4800 is actually a very good level, but I don't see anything to stop it before it reaches 3600. So I'm going to go for 3600 and I'm going to start buying. If you watched me before, you know that I've said it many times. I'm going to start buying gold at 3800 all the way down to 3300. It doesn't mean that it would reach there. It might just hit 3800 and continue going up, or it might reach 3700 and then continue going up. That's why I'm going to go for a dollar cost averaging, or DCA. All right. Okay, 1 second, please. Okay, guys. So yeah, the big picture on gold is that it's dropping to 3600 and then it's continuing the uptrend to $6,000 per ounce. Now, if you look at it, like for the past 2 months since May 11th, it's been dropping actually in a very, what's it called, in a very consistent manner. That's why you see this parallel channel. Okay, so now we got to this area, and then we got our entry around 4,175. Then the stop loss was initially here, above this, and then it moved down. We moved it down to here. I explained all of this last Monday and on Thursday, on my live stream on Thursday. And then on Thursday, I had this level marked out, which is 135, with stops above the same level, which is 182, 183, targeting the same target, which is 300 3,860, because I don't want to go like that's basically what Fibonacci is telling me. Okay, so the reason I'm taking profit at this area, it's because it's a Fibonacci level, right? That doesn't mean that it wouldn't continue dropping to 3,600. So since like I'm just telling you this because some of you would be saying, okay, you said it's going to 3,600, why close at 3,860? It's because of Fibonacci levels. That's it. What is dollar cost averaging? Okay, very good question, Meza. The dollar cost averaging, for example, an instrument's price is $5, okay? And you decide that I want to invest long term in this instrument. So a very good strategy investors use, that's not a trading strategy, that's an investing strategy, is DCA, or dollar cost averaging. What they do is every dollar to the upside, they keep buying, regardless of the price. They don't care. Like for example, 1 month it's $5. It goes above. It goes back like to $6. They buy again. It goes back to $4. They buy. So they keep buying and they keep averaging, regardless of the price. And even if it keeps going down, instead of just buying all of the amount or all of the quantity at one price, which is $5, they say no, they're going to buy it even if it goes, like they're going to buy 20% now. If it goes back down to $4, they're going to buy another 20%. If it goes back to $3, they're going to buy another 20%. If it goes back to $7, they're going to buy another 2%. So this way, if you do an average of those entries, you'll see that you have a very good entry price, which would be maybe better than 5, which is the current market price. So that's an investing strategy that works very good for people who are investing for many years. A good example might be the S&P 500. If you keep buying the S&P 500 every month with whatever money you have, if you keep buying it every month, you would have made more than 3,000% in the past 30 years. So imagine how great this is, only by using this strategy which is DCA. You did that with gold when you were a teenager, yeah. And I'm sure you did not regret that, right? Okay, guys, just give me a second, please. Because it's time to move to the calendar. Just let me pull it up. Here we go to here. What's the date? Okay. Okay, so nothing of high impact today, actually. We have Thursday, yeah. Tuesday, Wednesday, Thursday, and then we have Friday. Yeah, we're ready. Okay, so 1 second, let me share my screen. So, okay, like on the charts, what did we see? We saw that the dollar might continue going up from here, correct? and everything else actually supported that view. Gold is still dropping, euro is still dropping, and even GBP/USD is still dropping. So that might actually mean a continuation to the upside on the dollar. So now let's move to the calendar and see if that actually has any potential of happening. Let's look at the catalysts and decide accordingly. So now it's time to align our technicals with our fundamentals. We stop sharing this and we start sharing this. All right. I'm sharing my screen. Can you please help? Perfect. Okay. So today we have nothing of high impact. So we start with Tuesday. On Tuesday, we have the US CPI, as I told you in the beginning of the stream. We have the CPI, the core CPI, and of course, we have the monthly number and the yearly number. Now, the previous reading was 4.2% on the yearly number. Okay, now it's expected, like the CPI monthly number is expected to be much lower than the previous. Previous was a growth of 0.5%. The forecast now is actually a drop of 0.1%. If the actual comes in anything above minus 0.1%, we're going to see fireworks. Dollar is going to go up and everything else is going to go down. And core CPI, which is the most important actually reading because it excludes energy and food, is expected to go higher. And that's very tricky. Why? Because supposedly what's like taking inflation up is the energy prices coming from the tensions in the Middle East, correct? Between US and Iran. So the core CPI excludes energy from the equation and inflation is still going up. What does that mean? It means that we have sticky inflation and they have to raise rates to actually fight this inflation. So that's what that means. And it's somewhat dangerous and tricky at the same time. Because even if CPI, like headline CPI, like this CPI is called the headline CPI. The core CPI is the one that excludes food and energy. So even if the headline CPI comes in lower than expected, or like whatever, like if it comes in lower than the previous, but the core CPI is higher than the previous, then that's a hawkish sign for the Fed. They need to hike rates to fight this inflation because it's not energy that's bringing inflation up anymore. It's like everything else, services, whatever. Okay. So that's it for Tuesday. That's going to be the most important day of the week, I think. And then we have Wednesday. We have the PPI, which is the other side of inflation because PPI is the producer price index and CPI is the consumer price index. So where does it start? It all starts with the PPI, which is the producer side. So if energy prices are high, producers are going to actually have higher costs to produce because of higher energy prices. So this higher cost, who are they going to reflect it on? They're going to reflect it on the consumers. That's how you get inflation. So PPI is the first, let's say, layer of inflation. It's expected to actually go lower and be lower than the previous. I think this reading is wrong. 1 second, please. Okay, so last reading was actually very hawkish, and it was very surprising. It actually went up 1.1%, but the forecast this time is, let me check. Yeah, it's correct, 0%. So they're expecting like no increase in the producer price index, which is very dovish and can actually be give the Fed room not to cut rates and not to raise to hike rates. Sorry. And then, of course, we have the crude oil inventories. The first build in I don't know how many weeks, maybe 8 weeks. I don't know. It's been drawing from the inventory for the past months. I think 3 months. So now, previous or the last week, we saw a build in the crude oil inventories in the U.S., which actually should send oil down. But because of the tensions that Trump is reigniting with Iran, we didn't see that happening, and we saw the WCI go up, actually, not down. Okay, so that's it for Wednesday, and then we go to Thursday. Thursday is going to be a busy week. We have the GDP coming from the UK. So as I told you, it's not very impressive. It's still 0.1% improvement, but it's better than previous, and it's actually showing some strength. That's why the GBP USD is actually gaining some, or like is stabilizing above certain prices. And then we have the retail sales coming from the US. It's expected to be like much lower than the previous, 0.3% in comparison to 0.9%. So that's negative for the dollar. Then we have the core retail sales, which is expected to drop sharply to minus 0.1. And then we have the Philadelphia Fed Manufacturing Index. It's expected to go up. So manufacturing is picking up again in the US. Initial jobless claims is expected to stay the same. No increase from the previous reading. So 215,000 jobless claims. Finally, we have the European CPI on Friday. The previous was 2.8. It went down sharply from 3.2 to 2.8, and the forecast now is like a no change at 2.8%. But if it comes in anything higher than this, this would be the European Central Bank's cue to actually continue tightening, because they hiked rates. I think they were the first major central bank to actually hike rates. So yeah, we need to wait and see how those numbers unfold. But for me, I think it's going to be a hawkish week in terms of data, and it's going to be bullish for the USD. We'll actually update this on my live stream on Thursday. But if you have any questions like during the week, you know where to find me. I'll be more than happy to answer you guys. So that's it for today. I wish you a great trading week. Again, if you have any questions, I'll be more than happy to answer. Take care of yourselves. Good luck trading, and I'll see you on the next one, guys. Take care. Bye bye.